the key thing we need to look for is that we've just gone through a month and a quarter end, so you would have had a lot of funds repositioning for that, so we're likely to see a lot of volatility. The key thing here is that markets do not like uncertainty, and at the moment that is exactly the position we are in, something that we saw, for example, at the time of the UK election where we didn't know what was going to happen. You look at how the UK market reacted, just that now we're seeing it on a global basis, and these numbers are coming out every day. Countries are looking at different solutions on how to combat this. The US seems to be a couple of weeks behind Europe, which is then behind where China is. So as long as this uncertainty remains, I think the markets are likely to remain like this as we continue getting data intraday on an intraday basis.
Randeep, if I can just jump in, I want to ask you about the return to normality. You've been looking at that in the Asia context, but when it comes to Europe, it's hard to see the same measures being deployed. For instance, flights being rerouted to areas where there can be coronavirus testing, social distancing still taking place in public places. Also, just making sure that there's a monitoring process effectively with state quarantine so there's not reinfections of people coming back into the country. That's not really going to happen in Europe, is it? So how can we really take that China context as a sense of a time frame as to when normality will return and there'll be this removal of lockdowns that are having the most dramatic economic impact?
Unfortunately, we can't. And that's the biggest thing. The way China operates, they were able to shut down one area incredibly quickly. They were able to enforce law and be very strict about it very quickly. When we live in developed democracies like this that don't necessarily function that way and people have more rights, of course, they're going to behave and react differently, in which case we're likely to see this episode prolonged. And that's why the markets are reacting the way they are. It looks as if Italy has the situation under control now. The infection and the death numbers are starting to come down, so that has worked. But you also have the question of when these markets, when the lockdown goes away again, exactly what happens.
I want to ask you about some of the market behaviour because it hasn't taken long to flush out a couple of deals. They haven't been big deals, but they've been sort of more in the camp of bolt-ons at this point. I know you've been looking for some more activity in the M&A sector. What do you make of what we're likely to see in terms of big transactions, of rescues of companies, but also reversal of deals? For instance, a funding arrangement that we saw pulled from WeWork from SoftBank side this morning. So just give us a sense of what we're in store for in terms of that M&A picture.
Yeah, I mean, if you look at companies that are doing M&A on a long-term strategic basis, I think that will still be fine. If companies are high returning, well capitalized, the capital markets do remain open. Yes, we're in a period of uncertainty. So, for example, you had Luca on earlier talking about the LVMH acquisition of Tiffany. They're still going ahead with that. They still believe there's good value of that. Yes, for 6 months, it's likely to be a difficult period, but the balance sheet does stack up. More companies in that kind of situation, an LVMH type situation where they're big, they're strong, they're diversified, the balance sheets are good, the credit lines are still open. If they see something available, they're likely to go in. This is an excellent time to go in and buy, especially if the company that is your acquisition target is under any kind of difficulty. They'll be much more open to having something done. I think the one thing that we haven't seen over the course, especially of the last 6 or 7 years, is the fact that very low rates, very easy access to capital has allowed a lot of companies that probably wouldn't have survived in this market in what I would call normal circumstances have continued operating. That has now gone away. So, for example, things in the non-luxury retail sector that's always been a threat of online, you think that this episode is probably one episode too far for them, and they're not likely to survive this. The online players are likely to get much more stronger. You know, we've seen the amount of interest in Ocado and the amount of grocers around the world that are taking on the Ocado software platform now. They're likely to come through this stronger. The companies that were already in structural decline, this could be it for them.
Hi, I'm Joanna Bersecci and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.